And good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Monday, January the 22nd, 2024. Well, it was a pretty strong Globex session overnight that started yesterday on Sunday afternoon / early evening and continued overnight and basically through our opening here in the US on Monday. But we did finally start to get that pullback that I actually was expecting after Friday. I was expecting it to basically almost just begin pretty much immediately. But we left open that possibility that we still had a little bit more to gain before the markets would begin a pullback. Now, I'm just going to start here with the S&P. I'm going to start on the hourly chart because everything that's happened before remains the same. So I have no changes to make to a minor degree. And so we're still within and here in the S&P and a minor wave 5 higher, which so it's moving up. It'll consist of 5 waves of minute degree, of which now it appears very cleanly that we have finished 1, 2, and 3. Now, again, minute degree. So that would put us in a minute wave 4, leaving the 4th wave pullback and the 5th wave higher to complete minor wave 5, intermediate wave C, and primary wave B. It's been quite the trip, quite the adventure, so to speak, because this primary B wave began off of the October 2023 lows. And I cannot say with definity that we're not necessarily even going to break down further within this minute third wave, and all we've completed up here at 4898.25 is minuet wave 1 of minor wave 3. I have to leave that open. And the reason that I'm leaving it open is because of the intensity that the market has come back into starting on Friday, actually starting Thursday last week. So actually, I'm going to go back one more. Wednesday, starting on the 17th, they started to move back into the NASDAQ. They started moving back into high-tech stocks, and they started pushing, and they were relentless and tossing and throwing money into this market via Apple, AMD, Amazon, Google, Intel, Meta, Microsoft, Netflix, Nvidia, etc. We had stocks that did not fare very well, Tesla being one, constantly getting hit, rallied strongly on Friday, got hit again today. So that could continue as what they want to put in quotes, but they're calling the January effect. Now, remember that there has been a great deal of capital sitting on the sidelines, not all designated or going to be committed to the equity markets. Part of it will go into bonds, and we saw that begin today, I believe, where we saw both the 30-year and the 10-year note gain a lot of traction, ending the day down, but still, for a better part of the day, they were both higher. So again, while that's a different market, and yet still may have some downside to do before they pick up their rallies again, the fact is, it's like there may have been that influx or inflow of capital back into the bond market, along with capital being inflowing, going back into the equity market, all coming from a hoard of cash. And last I heard, and this would have been last year, at the end of last year, it was upwards of $5.2 trillion sitting waiting. So we saw some of it come in last year. We saw some of it being triggered in November with those massive inflows that we saw. We saw it again, some not as heavy, but we saw it again in November. Then we saw it again on Friday. Well, actually from Wednesday, Thursday, Friday, a big, huge bulk of it coming right in the last hour on Friday's expiration. Now, I tied most of that into Friday's expiration. So we started to see some of the high-flying stocks last Wednesday, Thursday, Friday, one being PayPal, which just kind of climbed and actually went up let me just see, went up 9, possibly even as high, yeah, but $9 between last Wednesday and this morning, and then started to drop back off after, reaching a high this morning. So starting to see some of that happen. Now, again, in my opinion, it's really just going to be a fourth wave. And now individual stocks could be just a fourth wave. So we shall see how this all works out. Dealing right now with the S&P, we have what I'm counting as wave 1, ABC wave 2, and then 1, 2, 3, 4, 5, and this is all extended. It all really just plays out very cleanly, very nicely. And so, I've got the 1, 2, and then if anything, this could be wave 1, but then 1, 2, 3, 4, 5, 3, 4, 5 of the 3. The ground and the territory that got covered was pretty strong. The initial move down, which again was early in the session after the open, came within the next half hour. So from 10 to 10:30 or 10 to 11, the market kind of sold off and then moved sideways. So all this to be, and we got one more leg down, very possible. Now, throwing up the fibs to see what the market's capable of, it wrapped itself around a very high level. And that level was the 618 for the minor fifth wave of all things, is where it wrapped itself back around the 4880 level, a little bit below, a little bit back above, and basically just hugging and always reverting back down to 4881 or 80. And I began to think, if I really went over and looked at my order flow volume profile, that likely was the point of control for today, because it certainly had a lot of play for most, if not the balance of the day, from about a half hour after the opening. So with that in mind, the first support line, 0.236, 4084, is at 4862. 382, the most common, excuse me, comes in at 4840. Now, nothing really there other than what we have here is what could be considered the previous fourth. It was a layer that I threw a lot of fibs that managed to work for the market. And so if this ends up being 1, 2, and that's 3, and that's 4, and then we get this 1, 2, 3, 4, 5 for wave 5 of 3, then again, we have that at 48.98, which held it today. And then above that, we would not have anything. But if wave 3 still was underway, still in progress, the next support, resistance level is actually 49.49. Now, again, if we're inside this 3, and this is a small 4 of 3, right? So it's going to be minuet wave 4 of minute wave 3. Then I need to go find minute wave 1, and let's say it was this one, and then I'm going to put that up. So this is just an estimation, folks. This is just, I'm not calling what this is, but this is part of what I tend to do when I'm just trying to work out what all could be going on. So instead of putting it there, I'm going to run it all the way up to here. And so 618 is 4905, equality 4924. So you can see we basically were just hitting right below 4900. So if we're still needing additional upside to complete minute wave 3, then we have it at 4905 to 4925. And then still get that larger fourth wave. Now that, you're going to be able to stop this recording or stop the playback and copy those numbers down, because I'm going to take them off. But that would be if we needed to continue to allow additional upside. Now, which now is going to allow me to take off this 2.618, which I was leaving up, but I just threw up a different set of numbers. So, but I would leave that up because if it goes full blown, we have 49.49. But we had that other one at what, about 49.40? So I'll leave it up for right now. But coming back down, if it is the minute degree, then I would expect it to jump back into gear, at least get to 0.236, 48.62. And that would be pretty much where we would be able to say, what's going on this interior here? A, B, and we drop back down in a C wave. And if that's the case, again, oops, I don't need the texts. I just need my drawing tools. So we come back up to here. We put it there. We drop it down to there. We raise it up to there. You can see, where do we get it? Same deal. ABC drops us down to the 236, 48.63, 48.62, right in there. And then if we really drop down, we got 1.618 brings us closer to 48.40. So it almost appears that this fourth wave is going to come in a little bit to the higher side versus the lower side. So 0.236 seems like it could be pretty strong in being an ABC down. Okay. So bringing it back out to the hourly chart. Once that is complete, I'll run my next layer. I'm going to take that off because it gets a little crowded. And that would be minute wave 4. And then yielding to the start of minute wave 5. And then I'm going to have minute wave 1 and run it up to that low at minute wave 5. And then we will begin to get our points of where this all should come to fruition. Now, going back out to the minor degree, we surpassed 0.618. So I'm actually going to take that out so that it stops preventing or presenting any confusion on levels. So what we have left in the minor degree for that fifth is where there are equality, where minor wave 5 equals minor wave 1, and that's 49.92. And that's where we begin to draw the line in terms of the possibilities where all of this may end. A break above there, which we likely will start to get indication of once we can draw minute wave 1 to minute wave 5. I know we'll have some additional levels that are bringing us up into here, and then we'll be able to pinpoint with a little bit stronger, not necessarily accuracy, but just got to pinpoint some levels that are likely should contain this move. And like I said, it's been quite the ride. Moving averages, let's just kind of open this back out. Let's take a look at the daily chart, see how it closed today. Yeah, it's still putting in bullish bars, although, a little bit of a topping tail, a very little bit of a topping tail. But we're still above the 20, we're above the 8 nicely on the daily. Interesting again, additional new highs in the index, lower highs in the RSI. This is on the weekly. So 2 days running, we didn't register a higher high on Friday under all that volume. And we didn't do it again today with just the new high. And there was some pretty strong volume to start off and kick off and carry us through Globex. Globex had some good volume. So, but basically during the day, didn't really follow through. So, RSI, same deal. MACD, same deal. That is what's going contra to this being a breakout, and we're just going to start flying higher. That we're not getting the strength from the internals that are really dictating. Now, you go look at the market again, Dow up 140, Russell was up very strongly today. But finally, in that extra hour, in that extra hour that we get between 4 and 5, we had the NASDAQ actually lower. We had the S&P actually a little bit lower. We had the Dow lower. So right now, they're going to reopen in about 6 minutes higher. They got them marked up about $8. And with the S&P will open up 1/4 of a point higher. So again, it just gets all up in the air. We're going to wait. We're going to see. But not a bad chart. It does start to show a little bit of exhaustion with all of this. But hey, we got to wait and see and trade what's basically in front of us. Let's go over to the NASDAQ, basically do the same trick. Now here again, look at the difference. This was just like the rally that just was not going to stop. Friday, and then Globex, and then we get that big surge in Globex. 4 o'clock in the morning for me, which is actually about 7 in the morning Eastern, we had this big push in Globex, and then an immediate drop, and then we rallied back to equal the high. And so we basically came in just under 17,596, which again, for the minor fifth wave, would have been equality. So here as well, it all fits. And I just didn't put it in. I'm going to do it right now so that I can draw everything else. I was one step ahead, wanted to get this update posted before I actually had my charts ready. So I apologize for that. I'm just putting in where I believe we have that third wave. Come on. And so I'll put that down. Now, that being the case, then we're going to go from here. And we're going to put in our fibs and run them up to there. So again, cleaning up this because I'm not looking for very much. I'm certainly not looking for 6187 or even down to there. So remove those. Basically consider this. Minute 4 cannot overlap wave 1, and that's at 17,056. But it certainly can come down to 0.382. But right now, what's ending up and looking like is that these fourth waves are going to come in at the high end of the fib scale, which will bring us down to 0.236, which is 17,374, we'll call it. With the 50, the hourly 50 right underneath it at 17,358. So that's still going to be pretty decent pullback considering we got to 17,582. So we can get down to 17,357 for 582. So it's still a good 250, 230 points. So not a bad pullback. Bring stuff back in line and set us up for the next rally. Now, what do we have above there? Well, we still have that minor 5. But here, I actually took them off for anything that's going to flow higher in terms of this third wave. But let me see if I can just stick them back on there. So we're looking for putting these back up. Well, 1.618, where wave 3 would be 1.618 times of wave 1. Right now, it just came in at 100. 100% is 17,844 is 1.618. 100% is just underneath all of this, which got hit. It did hit it. So that all works. And so actually the 100% is all the way down here. I beg your pardon. So 100% has been exceeded. The 1.628 would be next if wave 3 is not complete. And we get one more rise tomorrow to complete the minute wave 3. And then we drop in that minute wave 4. So 17,844, our next line in the sand in terms of an extended minute third wave. So I'm going to take that off. And we're going to see now they're bringing in a little bit more. We've got it down, not going to be all that much, maybe up 5, maybe up 2. So finishing this fourth wave, 17,374. Excuse me, I've had a problem with the voice still. Then we have the 50 at 17,358. And 382, which the NASDAQ is not opposed to. It usually can throw that little bit of a, okay, we're going to fall off that cliff a little bit type move, and that would be 17,242. But then I'm still looking for that fifth wave up And again, that's going to come and they actually open it down. Interesting how they do that, but so be it. We would connect minute wave 1 and put it over wherever minute wave 4 comes in to give us that line in the sand for minute wave 5. Initially, we have, once this 100% is taken out, and that's at 17,596. So basically 17,600 takes minor wave 5 up to this next level, 18,376. We also have this initial, this is for the irregular B wave. So this 1.236 is all of wave A, primary wave A. Oh, I got to go out even more. I got to go out to that weekly chart. How time flies. So all of primary wave A is where 1.236, that's where this one comes in. So bringing it all the way back down. So we have it above all there, 18,060, 1.236. Minor wave 5 can come in just above all that, 18,377. Are these realistic? Possible. Realistic? And well, did we think the market could get up to 17,500? It did, and then some. So what's to say that it can't get up another 500 points? We haven't even started the big boy earnings. Has absolutely kind of gone a little bit crazy here against the backdrop of they've gotten all these 2 major downgrades, one actually stating $180. So the stock went down there and decided, nah, didn't like it down there, and rallied massively to get itself even above here. So again, Apple also has a resistance at levels like 196, and then again, just below that 200, but 201, and then on up. It continues to have resistance, but it could move again to an all-time new high, and it would fit a pattern that could be in motion. But like the NASDAQ itself, I think once those levels are reached, both, because it would be Apple that would contribute to carrying the NASDAQ up to these lofty levels at 18,000 and then 18,400, it's going to come down, and it's going to come down pretty hard. So again, tons of things that can tip over this wagon. But moving average wise, looking pretty good. We've got the 8 kind of cresting and moving down with the market. We got the 20 basically flat right there. 50 still rising, but wants to kind of crest and maybe go this way, giving support at that 17,373 level. So the 236 looks pretty strong, like it should be reached. A break should drive us quickly down to 242. All right, I am going to call it right there. Now, tomorrow, let me just take a double look to see what, if anything, we have in terms of economic. And we have on Tuesday, nothing. Today at 10, we had U.S. leading indicators. They're like, oh, okay. So they came and they went. And I think the market reacted to them by selling off. So Wednesday, we're going to see the S&P Flash U.S. Services PMI and the U.S. Manufacturing PMI, both from the S&P. Thursday, we have fourth quarter GDP, initial jobless claims, durable goods, advanced U.S. trade balance, et cetera, and new home sales. Friday, personal income, personal spending, and the ominous PCE index for December. And that all comes out for the balance of the week. So starting of the week, a little bit weak, nothing tomorrow, no Fed people talking tomorrow. So we got nothing but just market. All right, that's where this is going to complete. And the next update will be Tuesday January the 23rd.